Welcome to the Coffee Break with the Fair Finance Fund. I am Sally Miller. I'm the Executive Director of the Fair Finance Fund, and I've been working in food and agriculture and looking for alternative finance solutions for the local food and farm sector for about 25 years. Done a lot of work in co-ops and also with social enterprises and that kind of work. And with us is also Jessica Cherry, who is our amazing communications department, half of it. So without more ado, a little bit of background. We started the Fair Finance Fund in 2018 as a response to, at that point, I was the executive director of a network of food and farm co-ops in Ontario called the Local Food and Farm Co-ops. And we got together every year and we asked people what they wanted us to do for them and, you know, basically get consultation to our strategic plan. And every year they were saying, we can't get access to capital. We often, even credit unions don't always want to lend to co-ops, even though a credit union is a co-op, but they don't understand the community ownership, the cooperative ownership that comes with a co-op. So they don't understand, they want one person who's the proprietor to lend to. Also local food and farming, people who are growing locally and then selling direct through farmers markets and things is fairly novel, and often the banks just don't understand how to lend to them. So there's a huge gap with the young farmers coming in, doing an amazing work, sometimes operating, you know, fully self-sufficient for 5 years and still not being able to get the capital to scale up. So we got a little bit of grant money and a little bit of startup capital, and we launched the Fair Finance Fund in October 2018. And the purpose is to mobilize equitable and accessible capital for Ontario's food and farm enterprises. And everybody that we invest in can very easily, actually more easily than we expected, name the social and environmental benefits as well as their economic contributions to the local economy. So, you know, like you saw at the beginning, we were looking at the organic farm that we invested in. So these are just amazing people investing in Ontario's climate resilience and the future of Ontario's economy. And one thing to remember when you think about this is that the #1 economic driver in Ontario is actually food and agriculture. And sometimes switches back and forth between auto workers and food and agriculture, but it's food and agriculture right now. So what we're looking at is 75% of farmers reaching retirement age in the next 10 years. And a lot of them don't have traditional transitions. They don't have a successor who's a son or a daughter. So we're looking at a massive transition in the agricultural system and our capital system that has not changed fast enough to deal with who the next generation of farmers and food providers is going to be. So what do? We offer very straightforward loan terms. We have a small team. We have to keep our operational costs really low. So we don't really negotiate interest or anything. It's just kind of fixed. So we offer loans between 20 and 100,000, which again is a kind of a mid-scale that banks don't want to deal with. Then there's microfinancing out there for the lower amount. So this is this weird middle part, which is often for farm equipment, things like that. We do 6% interest. It's all 5-year terms. We offer 90-day grace period for repayment. And one of the things that makes us very special is that we do not require collateral. So when we talk to investors, we have to explain this. But the fact is that what we're trying to do is build regional food systems. And we are not in the business of seizing people's farmland or their farm equipment. So it's not worth the cost of registering it as security, because we're not gonna take it. So then we do semi-annual reporting. And then one of the things that's really growing is that we actually do quite a lot of support with the people that we lend to. And I noticed that actually, I think our loan officer just joined. Maureen Strickland is here as well, so she can answer questions about the loans. Hello, Maureen. And we're developing something we call the Real Assist program, because we are working closely with some of the clients who really need significant things, or we're linking them with somebody who can do that. So that's becoming a big part of making sure the loan clients thrive. We do a lot of promotion of them too. Because of the pandemic, we looked at what we could do. We're pretty small, so we couldn't just start doing grants like some of the organizations could do. So what we did instead was we offer short-term loans, no payment for 12 months, and with a lower interest rate than we usually do. So it's between 5 and 10,000 too. It's a smaller amount, and this is really aimed at helping people in the transitions they have to make. So people who used to do all their sales in person, right, and now they have to figure out how to sell online and drop it at people's doors, or that kind of thing. So this helps them do the kind of pivoting they have to do. It can also provide, a lot of the government programs are reimbursement rather than an immediate direct pay. So often people need the cash flow of our kind of program to be able to wait until they get the government checks. So that's that one. And then on the other side, where do we get the money? We have some non-repayable capital that we got through grants, and that gives some protection to the people who actually invest. So that's money that we're not going to have to return. And we have about 350,000 in non-repayable capital. And then we offer investment opportunities, and they're open to non-accredited and accredited investors, so you don't have to be wealthy to do it. And we offer community bonds because we're a nonprofit. We can't issue shares like a for-profit corporation, but we can issue community bonds. And these work just like Canada savings bonds or any other bonds. They come with an interest rate and a term. So this was an offering. What's shown here is actually the offering that just ended May 31st, but it was $50,000 bonds at 4% interest, and $5,000 bonds at 2% interest. And we just, as we closed that offering, we had just gotten to 1.2 million, which is pretty good in about a year and a half of operations. So we're feeling, very confident that we're doing the right thing. So this is an example of another loan client. We invested in a direct trade chocolate company. So it's Chocosol is in Toronto, buys directly from farmers, and actually comes from somebody who was working with the farmers in South America and then decided to start this chocolate company in Canada. So they're very good integration. And they needed this beautiful shiny new machine. We always feel good when we can see a picture of what we invested in. So we got that machine, and it actually makes the roasting of both the cocoa beans and the coffee beans, because they do coffee as well. They can roast both of them in there, and it's much more efficient. So it reduces greenhouse gas emissions. It costs them less in energy. And one of the things I always say with this picture is, clearly for this business, this is not just saving the money, but by meeting some of the environmental goals of reducing greenhouse gas emissions, it's saving the money. And that's very important, that I think the best businesses are actually doing both at once. And the fact that you're doing environmental benefit is part of the reason that your business is doing better. And that's Chocosol is thriving. And they're one of the ones that had to adjusted to do online, but they've always delivered by bicycles all over Toronto. No, that's one of the ways they reduce emissions. And again, we invested in one of the first hardy fruit orchards in Northern Ontario. So for this farm, it was a new market stream. It was going to provide fruit more locally rather than having to get it from the south. So it's reducing supply chain miles. It's connected with their pig operation. So they're using some of the waste from the pigs in order to develop the soil to better soil health. So again, it's all integrated, and this is what we're trying to invest in. So I say, with climate change and everything else going on, how can we afford not to make this kind of investment? So there's Mulberry Moon. That's the organic farm I talked about at the beginning. And these are some of the impacts that we are tracking with them. One of the things they did was to check the soil health because they just moved onto that farmland. So they're tracking soil health and reporting back to us as their organic methods make the soil stronger and stronger, and less and less prone to erosion and less compacted. And they're doing that through all kinds of organic methods, cover crops and compost and things like that. And they sell direct through a box program called a community supported agriculture. This is a tiger nut ice cream that we invested in, and they're now developing a tiger nut oil and a tiger nut flour, and it's all gluten free and it's probiotic, so it's very good for people's health. Black River Co-op is a farm co-op again in Northeast Ontario. Anyway, they're actually, the farm co-op is a group of businesses, so all the members are land-based businesses. So this is one of them, and we invested in a 4-season greenhouse, and here they are improving their soil. And the most recent one is on Manitoulin Island. You can tell this was winter time. They are a local brewing company. They try to use local ingredients. Right now they are doing online market, which we help them develop, and they're delivering all the way to Sudbury. And they're amazing, and they're woman-owned, women-driven. It's an awesome organization. So this is the summary. So this is what we're looking at. At the minimum, and this is the absolute minimum to make this work, we would have around 3 million in assets under management. Our plan is to give 10 to 15 loans annually, although during the pandemic it's been a weird time, but and our calculation is that from the businesses we're supporting, we're getting $4 of impact for every dollar we invest, and 1 new job for every 20,000 that we give out in loans. So over the course of about 10 years, we would have about a $7.5 million cumulative loans, because 5 years they come back and they go out again. We don't use any of the investments to run the organization. And that's it. And that's the contact information if you want to get hold of us.